What's good, YouTube? It's your boy Rich Take Profit. I'm back at y'all with another video, and this video is different. I'm gonna be going over today's trade that I took on my demo. As y'all know, I am currently demo trading right now to just follow my rules, follow my execution style, and just understanding, like getting a lock in on my process and my process only, my thoughts only, my rules being followed only. So, um, yeah, I'm just gonna give y'all some sauce on what I was seeing going into today for NQ and for US 30. I'm gonna try to make it quick and simple. But yeah, without further ado, hopefully my audio is good. I won't know until after this video is done. Um, but this is my first video recording on the laptop. I didn't know I can do this. So this is gonna be very convenient for me, just getting some content for you guys. So if y'all new to the channel, make sure y'all like and subscribe for more content like this, where I help traders with their psychology and y'all follow me along on my journey. But yeah, ignore this teddy bear. This is it's just on my bed. Me and my girl, you know what I'm saying, got an apartment. But hey, I do mess with my Pikachu, you know what I'm saying? But we comfortable. We comfortable. And yeah, we finna get into today's trade. So as y'all see, we did have sales in the market and we are on a bullish trend, but I don't know. I mean, NQ's giving like it wants to fall, but it's kind of holding at this little resistance area that is now support. But I want to speak on today specifically with the sale. So if we go down to the 1 hour time frame, as I always do, I mark up my previous day highs and lows. That's the first thing I do every single time is previous day highs and lows. They just help me see where price can possibly do a false break, where price can target later for any shorts or buys. So it's just key that I mark these levels. That's the first thing that I do. And then after that, I pay attention to the Asian session, and it's a lot of consolidation here. Honestly, when market opened at 8:30, I learned to not really be trying to trade right at market open at 8:30 because I want to see where price is going. So when price first opened, it shot up. So I mean, it looks bullish from afar. But I wanted to see if price was gonna run this previous day high, which it didn't. It just started falling, and once it fell pretty hard. And so from a higher time frame, I wanted to let price cook a bit, and the impatient version of me would have been trying to get some type of trade in this candle. And that's one thing that I'm kind of glad that I wasn't at the charts at this time. But I just want to be able to practice not being impulsive. So during this candle, there's a lot of manipulation going on, and there's maybe opportunity for you to get sales, but I want to give y'all the easiest sell. What is easy to see here with price? We got this Asian session high, Asian session low. We are at the high of the day, right? When it comes to NQ, I like high of the day. I did not want to do that. No, no sticky keys. All right, here is the high of the day while I was at the markets. This is high of the day. The low of the day was clearly here, right? So if price is at the high of the day, we want to see price run the low of the day. But I also keep in mind of the previous day high and the Asian session high. So if we come to the market, right, I want to see price sell off because we're at the high of the day. We're near the previous day high, and it kind of wanted to run it, but it didn't. But it could be other reasons for that. If you guys trade SMTs, we can look at S&P, and it didn't run no high there either. So this is just a double top, honestly, which is another selling indicator. Um, so when price pushed up, we wanted to see if it was gonna break. It fell, so it's kind of like a false break move of the Asian session high. Set the high of the day, ran an Asian session high, and created a double top. So when we fell, right, right here, this 8 o'clock, we fell and closed below this area here. So on some market structure, we're consolidating, and then we had a false break move to the upside. So this is like a three phases of the market, right? If you guys remember a video I dropped, the consolidation is the three phases. I'm sorry, three phases: consolidation, and then you have the run. It should have been a run of this high, right? But it's a false break of this consolidation slash Asian session high. Then we get the displacement lower, right? So when we get this big push to the downside, this is part of leading up to our third phase, which is like the retracement. So me being patient, I waited for this entire candle to close. We were super duper bearish, right? And I wanted to find a place to take advantage. If you guys pay attention here, it's kind of hard to see with this Asian session. I need to lower this. I need to lower the opacity on this a bit. I want you guys to be able to see the fair value gap a little bit better. Here we left behind a fair value gap on the previous day, and when I drag it over, you can already see how price responded. So this is a fair value gap. When it came to price, right, it disrespected and closed below this fair value gap. So we can look at this as a bearish indication now for an inverse fair value gap, which is pretty much nothing but a fair value gap that gets disrespected and then it gets respected to the opposite direction that it was originally formed for. This right here is a bullish fair value gap. So you would think to have price come into it, right? And the moment it fills the gap, it starts to fly to continue higher. Zooming out, we already see that price from the previous day, which was actually last Friday. Price had a push up, and then we had a push like we fell, right? And I'm a fib. I like drawing fibs, so I like testing out my fib levels and seeing what we're doing here. And what happened was, I'm gonna drag this over. Price had a push up, price fell. It ran past the 38, played around at this 50%. It was holding this level here. So this is a level of importance, right? And then price shot up into today. But when price came down here, it didn't really respect and push higher. And the fact that it fell, right? I just didn't even use this fib anymore because it never finished the move. And I really don't like how far it came, right? This is indication that um buyers were strong here, trying to keep it up. But once it returned with this bearish engulfing on the 1 hour time frame, I was already thinking bearish. I don't want to go all over the place. I want to just stick to what I've seen today. Um, so the three phases, right? Consolidation is one, and then we have the run of a previous day high or run of the Asian session high, right? This is the false break move. This is a manipulation to believe that we are going higher, to get all the buyers in just to crash them all out, right? I'm gonna leave that one purple. When it falls, we run to this fair value gap, disrespect it, close below, and then we fill it to the upside. And also, um, like a little tip, this is like an area of interest here because after the consolidation, price broke out and retested this area, right? So you guys can look at this multiple ways. Breaker blocks, right? Order blocks, breaker blocks. I really stepped away from it. I don't really use it as much. But this is an entire area of support here. This is an area of support, right? I'm just gonna put support resistance. This is an area of support. Price broke through that and retested and became the new resistance, right? With the fair value gap. So I looked at this immediately, didn't waste too much time on it. We could go to the lower time frame if you guys want an even better entry. But for me, I just like things that are simple. High time frame, I might not get the best entry, but we're here for the move. And the best entry I can get from on the higher time frame is the fill of this inverse fair value gap. And if I would have got in, I would have been getting here at the fill of this inverse fair value gap, risking about 30 points. And I could target 60 points for a 1 or 2. Now, I'm going to give y'all the Rucci special. I love fib retracements, okay? And this is where I can get a more precise entry. Now, follow along with me. We got the 3 phases of the market: consolidation, we have the run of the Asia session high, and then we have a push lower, and we want the retracement, which is the third and final stage. So, for the retracement, this is where I pull out my fib tool, okay? If we pull a fib from the high, right, almost running that previous day high, to the low, right, and we pull it to the low before we begin to retrace, I want y'all to see how things just start to piece on top of each other. All right, this is the high, this is our low before the retracement at 9 o'clock, right, before 9 o'clock. Okay, 38.20 is my continuation level. 50% is also a continuation level. But when we have very impulsive moves, false break moves, prices moving very fast, the 38.20 is like my bread and butter to where price can come and fill and keep going. The 50% is usually used for moves that are from the previous day, right? Like if yesterday was very bullish and then price started to retrace into the current day, I would be looking for the 50% retracement before it pushes higher, because over time it price was able to play around and do a lot of other things within the market, so it can have room to go to the 50 and then take off from there. Um, but just on this setup specifically, here is the entry, right? So mind y'all how even on the without the fib retracement, you can get an entry at the fill of the inverse fair value gap on the 1 hour time frame. But if you also pull out the fib from the high to the low before a retracement move, you can get a way more precise entry. Okay. And that's really just what I wanted to show y'all here. Obviously, it looks crazy because I'm on different time frames. So I'm just showing y'all this happens very fast. So the key is knowing the direction, understanding that we are bearish. Why? We're bearish because we are at the high of the day for NQ at New York Open. So most of the times when we're at the high of the day or we're at the low of the day at the time of open, price usually does opposite. If we go to Friday around 7 a.m., where are we at for the current day? We're at the low of the day. What did price do? Buy higher. Let's go to this day. Where are we at? At 8 a.m., right? I'm pretty sure we pushed up higher and then we fell because we were at the high of the day and wanted to go lower. Hold on, let me go back. Let me scooby doo doop 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 doop. All right, look at this. 8 a.m. Where are we at? The high of the day. What do we do? Fall. Right? Probabilities here. It doesn't happen every day, but it's the probabilities here. Okay. Look at what time it is. All right. This is a Wednesday. I don't really like Wednesdays. They're funny with me. But even then, here we are. And this is a real consolidation day. What was Wednesday? December 3rd. There's a lot of this consolidation here, but I'm just showing y'all around the time that market opens, which is market opened at 8:30. We're also at the low of the day here. What did price do? Flew up. All right. Here, it didn't happen this day, right? We're kind of towards the high of the day on when market opened, and it still flew up, but it probably was other reasons, right? Maybe there's a 1 hour fair value gap here, 4 hour fair value gap here, and there's just other things. So when you do your top down analysis, you'll find things like that. But I'm just showing y'all the probabilities of low of the day versus high of the day at market open. Price likes to fall, or price likes to push up, create the high of the day, and then fall off, or it likes to create the low of the day and then fly up. I think I just did I say that right? I think y'all get my drift. So today, price pushed up at 8:30, created the high of the day to go and run the low of the day, which is here. But there's all these other things that I have included for you guys. So fib retracement is the sauce. That's my bread and butter. That is how I get the best entries. So when price fell, retraced, right? Holding this support that we broke, that is now resistance. We broke below. It's a break and retest. We retest at the 38.20% of this falling move after the false break, after running the Asian session high. So when it comes to the risk, right? I want y'all to follow along with me. Even if you get in at this fill of the inverse fair value gap, you can get in at the inverse fair value gap fill. Or if you had this fib retracement, you'll be waiting for price to reach this fib retracement, taking an entry from here, and you can target a 1 to 2, which it would just be um, around this same area that it retraced from. You can also target previous day low, but we are very far from that. So the safest take profit could be almost a 1 to 3 at the 25%, or we can get the 120 point move at the 50%. All of this is personal preference. Me, I just know if I get a 1 to 2, I'm good. But if I can go for the 1 to 3, I know I can keep myself in the game long term going for 1 to 3s. And yeah, the fib is what allows me to get larger TPs, right? Higher risk to reward ratios. And a lot of times, depending on the type of setup I am, like if I'm doing inverse fair value gaps with fib retracements, that's what I usually go for. And a similar thing kind of happened on 30 as well. So as y'all see, price actually did run the previous day low. But the thing that happens on 30 is the same thing. Our just retracement was a bit ugly. Usually 30 has clean retracements, but um, on today's trade, she retraced around to the 61.8%, which that's not really me. So if I would have had an entry on this trade, I didn't take it, but my entry would have been at this 50% fib retracement level, and I would have been targeting the previous day low because it would have already gave me over 100 points. But also the 25% would have gave a 1 to 3. But a 1 to 3 with me risking 50 points is literally 150. So um, until you get more experience, I just want y'all to take 1 to 2s. And then if you guys can see what I'm saying when it comes to these fibs and how they always reach these levels, then you guys will be able to take advantage of those, right? And this level I have here, I'm trying to think, what is this that I marked up here? Not really too sure what I marked up here. Maybe a fair value gap or something that I wanted to see be targeted. Oh yes, daily fair value gap. So yeah, this was a daily fair value gap that I wanted to see price kind of go towards. After filling this daily fair value gap to the left and giving rejections and then falling. So yes, I know it might not fill this fair value gap, but I mean, what do you think it's about to do, right? And this is just happening with time. These moves happened hours ago. But yeah, same thing here for US 30. If I was to clear my chart right now, um, this fair value gap was a daily, right? And just do this really quick for you guys. This is my process here. This is previous day high, previous day low. And I can like put the mark on there. Y'all see that. But yeah, if this is making sense, let me know in the comment section down below. If it's not making sense, you can say that too. Um, I'm just kind of giving y'all, I'm trying to simplify my strategy but I just know I've been doing this for a while, so I can really ramble on and on. But yeah, um, so me looking at this, like I said, double. It wasn't a double top here, but price literally had consolidation. But this is ugly price action. Like, to keep it real with you guys, this is ugly. I really don't like seeing consolidation like this going into London and then at market open. I'm just trying to make a decision. I want to wait for confirmation. I want to see where price wants to draw, right? So off rip, I'm not gonna really mark up too much on my current day. I don't do low today, high today with US 30. Doesn't move like that. That's for NQ. For 30, I'm really just looking for big time frame reactions, right? There's really nothing here for me to go off of. This is ugly to me personally, right? All I can see is that we have this big fair value gap here that hasn't been completely filled yet, which is also about to get filled, right? This is the only gap remaining on the higher time frame. And with the daily time frame as well, this is the same fair value gap that's on the daily time frame. So if you want to really keep it a bean, this is why I was kind of bearish, is because price filled this fair value gap to the left, and then we have a fair value gap down here to be respected, and it's about to fill it as I speak. So looking at this, if price wants to target this area, I want to see price push down, give a retracement, and then continue lower. So that's pretty much what we got here. Now, it didn't really have that run of us. It ran the Asian session high, but to be frank with you guys, it doesn't have no fair value gaps. I'm not taking nothing here. I'm not gonna take a short here. I would like, if this was the previous day high and price shot up and then fell and then give a retracement and then died, that would have been beautiful. But what we got for 30 was just a huge drop. So all I can do was pull a fib from the top of this move, right, to the bottom of this move before we gave retracement. And 30 wasn't really that clean, and that's why I took the trade on NQ this morning instead of 30. But if you guys still look here, if we go to the lower time frame, I can give you guys the exact stopping point. So price fell, gave a retracement to the 61.28%, and then I would have been getting an entry at this 50% level, right around here, and I would have just been targeting previous day low as TP1, TP2 being this 25% level, and TP3 at the 50%. But that 50%, you're going to be in a trade for a longer time than usual. You're going to have to deal with some pullbacks, some falling, some pullbacks, and I'm in for the quick grab. So that's just what helps my psychology. If I would have risked 50 points on this trade, targeting 100, this would have smacked easily within the first. This would have smacked in about 45 minutes. So yeah, hindsight, this was it was a pretty long trade. But it would have been about a good hour if I wanted to go for this 25% level or just the previous day low. But yeah, um, my opinion, good trading day. US 30 did not give the cleanest retracement. So we stuck with NQ, right? And NQ just had more for me to touch off of. It was more sexy to look at today. We had this inverse fair value gap, like I said. We have the break of these support levels on the 1 hour time frame with the retracement, rejecting, creating that resistance, and it's at the 38.20% level after this bearish move, after almost running the previous day high at the high of the day. So nice flush, come back up in continuation. That is how I am trading, right? This is how I'm currently trading. I'm not changing it. I'm not using too much imbalances. I'll only use an imbalance on certain days. Like, how can let me see if there's an example that I can give. I don't really see it here, but not too long ago there was some times where I trade imbalances, but that's another time for another video. I just wanted to get on here and do some chart play just so y'all know, like, this is how I trade. And Everything is journaled. Everything is in the books. It's part of my playbook. It's my bread and butter. Fair value gaps and fib retracement are my bread and butter setups. All I have to do is know when price is falling, when price is buying, and using highs and lows to pinpoint where I need to be when it comes to these fibs. Because drawing a fib just because it looks bullish isn't enough. You know what I mean? It needs to be something significant happening. I drew a fib from this short because why? It broke this level. It broke this support level we had here, right? So that's simply it. And we have the three phases of the market. So my phase one is consolidation. My phase two is the run of the high. So that high that it runs and then falls, I'm pulling the fib from that high as it falls. Because when we're ready to retrace, this is gonna be a main point. I need the fib to know how far it's gonna retrace and my best possible premium before it falls, which is a 38, and it can happen on the longs as well. So yeah, I'm gonna drop more videos on my specific playbook so that way I don't have to confuse any of my viewers, because if y'all have seen my last trading setups, I use some of the same concepts, but I was throwing too much on there, right? But all I have to do is make it ABC 1 2 3, and just keep showing that to you guys until it becomes more and more um, receivable. But if you guys want a video on me just literally digging through my charts and giving y'all how I see the market, leave that down below in the comment section. And now that I can record videos on my laptop, I can easily bring more videos to you guys. So that's it for this video. If y'all enjoyed this video, like and subscribe. I appreciate everybody that's been rocking with the channel. I'm just trying to be more creative and just do more things. That way, it makes it fun for me. But yeah, um, that's it. That's your boy, Rich State Profit, signing out with another video, man. I'm gonna catch y'all in the next one. Keep God first, keep grinding and growing. And I'll catch y'all in the next video. Peace.